Hello, and welcome to the March episode of the IASB Update Podcast, where we bring you the latest news from our recent IASB meeting. I am Nili, Shah, Executive Technical Director of the IASB. And joining me today are Andreas Barckow, Chair of the IASB, and Jianqiao Lu, one of our IASB board members. Welcome to both of you.
Thank you very much for having us.
Thank you. So in today's episode, we will focus on 4 of the 6 projects that the board discussed in March. First, we'll talk about the post-implementation review of IFRS 16 leases. Second, intangible assets. Third, statement of cash flows and related matters. And last but not least, our forthcoming agenda consultation. So let's start with our work on the post-implementation review of IFRS 16. Many of you are well aware that IFRS 16 came into effect from January 1st, 2019. And the standard mandates that lessees recognize assets and liabilities for leases exceeding 12 months. As you can imagine, for many entities, this was a substantial impact on the reported assets and financial leverage for the company. Now, as you might already know, a post-implementation review, or PIR for short, is conducted a few years after a standard has been implemented to see if it's working as intended. So with this PIR, we will be assessing whether IFRS 16 is working as intended and is effectively meeting its objectives. So Andreas, can I turn things over to you to talk about the current status of this PIR project?
Sure. So the PIR process consists of 2 phases. In the first phase, which we are currently concluding, the IASB is identifying matters to be examined, drawing on conclusions and discussions with the IFRS Interpretations Committee, the IASB's advisory groups, and other stakeholders. The IASB publishes a request for information, or RFI for short, to seek feedback on the identified matters. Phase 2 then involves consideration of the comments that we have received in this public consultation, along with information gathered from any additional analysis and other consultative activities. Between June last year and January this year, IASB members and technical staff met with a broad range of stakeholders from various regions to determine the scope and the content of the RFI. The IASB also held 2 educational meetings with the FASB, at which the 2 boards discussed their respective post-implementation reviews of leases standards. Overall, IASB members and staff participated in or observed nearly 30 outreach meetings. At the March meeting, we discussed the feedback on the requirements in IFRS 16, a review of academic literature, and the staff recommendations for the IASB on which matters to include in an IFI. Overall, the feedback indicated that most users and almost all standard setters, regulators, and members of the IFRS Interpretations Committee said that IFRS 16 is working as intended, has achieved its objectives, and improved financial reporting. However, it's fair to say almost all preparers said they incurred high initial cost, and many said they continue to incur high cost on an ongoing basis of applying IFRS 16, but they see limited or no benefits. We noted the concerns of many preparers about high ongoing cost of applying some of the requirements in IFRS 16, as well as some stakeholders' concerns about the application of IFRS 16 requirements. Therefore, we are envisaging including relevant questions in the RFI to cover these concerns and to learn more about stakeholders' experiences. In terms of next steps, then the IASB will be asked to approve the publication of and set a comment period for the RFI at a future meeting. We expect to publish the request for information by the end of June 2025.
Thank you, Andreas. So let's move on to the second project we wanted to talk about today, which is intangible assets. And I have to laugh at one of the comments one of our board members made during the session, where Hagit said that the agenda paper for the board meeting was her dream paper. So I recommend, if you have time, to have a look at the March intangible asset papers to learn more about Hagit's dream papers. So let's refresh. We launched the Intangible Assets project in April last year, following the IASB's third agenda consultation, where stakeholders highlighted the importance of this topic. Our goal is to comprehensively review IAS 38 and determine how to ensure that financial statements provide investors with the most relevant information about a company's intangibles. Since then, we've been reaching out to stakeholders to gather their perspectives on the project's objective, scope, and best approach for tackling this complex area. Jianqiao, can you tell us more about the discussions in the March paper?
Sure. At the March meeting, we discussed the analysis of all the feedback and evidence gathered to date, and the staff's initial thoughts on possible objectives of the project and the topics the IASB could explore to meet those objectives. Our discussion of possible objectives was based on the feedback about the main problems identified by our stakeholders. Most commonly, we heard that first, IAS 38 is out of date and in need of modernizing. Second, financial statements provide insufficient information about intangible assets or expenses on intangible items. There are also three other common themes we heard. The first is that there is a gap between an entity's market capitalization and the book value of its net assets. The second is that there is a lack of comparability of information about internally generated and acquired intangible assets. The third is that there is a lack of recognition of internally generated intangible assets. Based on our analysis of these main issues, our initial thinking is that the objectives of the Intangible Assets project could be to, first, modernize IAS 38 to better address newer types of intangibles and new ways to use them. Second, improve information entities provide about intangibles in their financial statement. This objective is quite broad and could be met by looking at recognition disclosures of both. The board will be able to narrow this objective as the project progresses. The staff think that having two objectives could be appropriate, as these objectives are unlikely to conflict with each other. In fact, they could complement each other. At the March meeting, we also discussed the scope issues of the project, such as whether and how we could explore the accounting for intangibles held for investment, such as cryptocurrencies and carbon credits within the project. Whether we should address a broad range of intangibles in the project, not limiting to those assets or expenses relating to intangibles which are recognized in the financial statement. Whether we should scope goodwill accounting in or out. We also discussed the specific topics whether or how we should consider in the project, such as updating the definition of an intangible asset, investing whether more intangibles should be reported on the balance sheet, how to improve measurement or disclosures about intangibles. In the next couple of months, when we will be discussing the project again, we will make a decision on the direction of the project. To support the IASB decision, the staff will build on the analysis by incorporating comments from the March meeting, strategic advice from ASAF members, and analysis of adjustments users make to information about intangibles in the financial statement. So stay tuned.
Thank you, Jianqiao. Let's move on to the next project, which is Statement of Cash Flows and Related Matters. This project was added to the IASB's pipeline, again based on feedback from our Third Agenda Consultation. At the board's September 2024 meeting, the IASB started its research project on the Statement of Cash Flows and discussed initial research it will do on the project. Through feedback from the Third Agenda Consultation and an academic literature review, we identified the topics we wanted to cover in our initial work. Jianqiao, can I turn things over to you again to talk about what's happened?
Sure. In relation to the initial work, we have completed our initial research. We received rich feedback from our consultative groups and the stakeholders we interviewed. We also gathered evidence and findings based on the research performed by national standard setters and a preliminary review of a sample of financial statements. So at the March meeting, we discussed those findings from our initial research. The findings suggest that stakeholders' concerns in some areas might be addressed by building on the requirements that already existing within IFRS accounting standards. For example, requirements in IFRS 18, presentation and disclosures in financial statements might be particularly useful when addressing research topics such as classification of cash flows, disaggregation of cash flow information, and commonly used cash flow measures such as free cash flows. The findings from the initial research also suggest that an important research topic for IASB to explore in this project is information about the effects of non-cash transactions. This was clearly a high priority topic for many investors, and we discussed some initial ideas about how the topic might be considered. In contrast, the findings also suggest that there isn't a demand from most stakeholders for change to the requirements for presenting operating cash flows using either the direct or indirect method. We also discussed that we could consider only later in the project concerns about the statement of cash flows for financial institutions. We discussed it being important to keep requirements for these entities in mind as the project progresses, but that the cost-benefit balance will be different, and whether some of the requirements are applicable for some of these entities might need to be considered. Lastly, the findings suggest that no fundamental changes to the definition of cash and cash equivalents and categories in the statements of cash flows are needed. During the discussion, we also observed that a few research topics, like classification of cash flows and disaggregation of cash flows information, have touch points with easier projects on the work plan, like PIR of IFRS 16 that Andreas spoke about, which related to the presentation of cash flows relating to leases, or research pipeline project like a project on operating segment, which on whether we should explore that requiring entities to present cash flows at segment levels. So in May, we will decide on a more detailed project plan of how and when to explore these research topics. So stay tuned.
Thank you, Jianqiao. Lots to look forward to. So let's turn to our final topic today, the IASB's Forthcoming Agenda Consultation. We mentioned the third agenda consultation several times during this podcast, but what exactly is an agenda consultation? An agenda consultation is the process we do at least every 5 years to obtain stakeholder feedback to help the IASB determine its technical strategy and work plan. At the March meeting, the IASB kicked off its fourth agenda consultation, which will cover its strategy and work plan from 2027. This meeting was just intended to discuss the staff's initial thinking. No decisions were made. But Andreas, can you tell us a little bit more about what the board discussed?
Happy to. So the IASB mainly discussed what the agenda consultation would cover. The staff's thinking is that it would seek stakeholders' feedback on 3 areas. 1, the strategic direction and balance of the IASB's work plan. 2, the criteria for assessing projects to be added to the IASB's work plan. And 3, priority technical projects that the IASB should work on. We've already been hearing requests for us to work on projects such as pollutant pricing mechanisms and hyperinflationary accounting, amongst others. And for our repeat listeners, you will have noticed these topics in our January and February podcasts. But both our capacity and the capacity of our stakeholders is limited, so we need to be thoughtful in which projects and how many we add to our work plan. The IASB would seek this feedback by publishing again a request for information. This agenda consultation will be different from previous agenda consultations because the landscape has evolved, with the creation of our sister board, the International Sustainability Standards Board. So we will describe how we connect with each other to ensure that our standards are compatible and avoid potential inconsistencies and conflicts. We will also seek feedback on the nature and priority of potential joint projects that the IASB and the ISSB could do together. Stakeholders, for instance, have identified projects such as a joint conceptual framework and a project on integration and reporting in the past. Normally, an agenda consultation covers a 5-year period. So our fourth agenda consultation would cover the period from 2027 to 2031. Now, the IASB has just concluded an agenda consultation on their side last year, so it does not make much sense for them to consult again this year. To bring our respective consultation periods in sync, we want to allow for some flexibility as to the time period for this fourth agenda consultation. Our tentative view is that when the IASB starts its next agenda consultation during this period, we will do so as well, so that we can align time periods for agenda consultations going forward. This will help both stakeholders on the boards to consider the priority of joint work in relation to each board's work plan at the same time in the future. In terms of next steps for this agenda consultation, we plan to meet with our consultative groups to discuss the potential content of the RFI in the second quarter. We then move on in the third quarter to discuss the content of the RFI and make decisions. And we then will be publishing the RFI in the fourth quarter of 2025.
Thank you, Andreas and Jianqiao. And listeners, thank you for joining us in this podcast. We look forward to bringing you further updates on these important projects and other ones in the future. Stay connected with us through our website and social media channels for the latest news and updates. And we hope you can join us again in April. Thank you.